Okay. So Angel Oak is not a fair lender, and I'm your accounting executive, Tom Perry. And if you haven't done any business with us in the past, welcome. We hope to establish a great relationship with you guys. I will say that we've been doing non-QM loans since about 2012. We are the largest producer of non-QM loans in the wholesale channel. You can check that against the Scotsman Guide. A lot of people want to lay claim to it, but we are the largest. We just got through doing almost $1 billion worth of securitizations over this last month. We do lots of loans. And these loans, we are what you call vertically integrated, which means we are the originator of the wholesale channel. We originate through wholesale. We have our own secondary marketing department. We have our own capital markets department. And then we also have our own investment department, which invests in the sovereign funds in the United States, overseas, insurance companies, and everything else that buy our loans. So our guidelines are written specifically for our investors who we have spoken with, and they understand what the risks are on the loans. Now, over the last 10 years or 11 years, we have established such great relationships that now we have about 30% of our loans that do receive exceptions on them because we know what the investors will and won't take. So we're not going to our investors for these exceptions. They are done in-house. So we make the decision locally. We're not going to anybody else that we're selling these loans to. So it's a quick response usually on these exceptions when we ask for them. We're getting small exceptions done on FICO scores. We're getting exceptions done when it comes to whether a property is occupied or not, when it's refinance. I just got that one recently. Sometimes you'll get an exception on DTIs if you have a lower credit, higher credit score, and a lower LTV. So it all depends on the nature of the loan. Our executive team now is saying, hey, you guys bring us loans that are good loans because we want to look at them and see if there's a way we can make them fit. So it's a great time right now, unlike in 2021 and 22 when things were tightening up. We are easing up our guidelines and adding product almost on a monthly basis. So we're excited at this point in time to get these new products and opening up our guidelines again. That is enough of the boring stuff. So let's get into stuff that means something to you, which I'm going to share my screen. Let's see. Hold on just a second. So can everyone see the screen that shows innovation solutions for underserved borrowers? Bridge. Does everybody see that?
Yeah, I think we can.
Okay, all right.
Yeah.
Perfect, great. So this screen is, this site is where you're going to go to start anything you do with us. That URL is angeloakms.com. And again, this is where you're going to start everything. Right now, all this information is available to you without credentials. You do not have to have credentials unless you go into actually the TPO portal, and that's a login that does require credentials. We'll talk a little bit about that here in a minute. But I was requested to come on today and talk to you a little bit about product or programs. So let's get into that right quick. You'll see we have various programs here. We have a resource here. We'll talk about that as well. The mortgage product, overview, you'll see some very short descriptions of product. And then what you can do is you can click on each one of them to get a little bit more information. Bank statement number one is the product. So this is the product.
Hey, Tom, sorry to cut you off real fast. Can you mute everybody on your side?
Let me see if I can do that. Hold on. That should take care of it. Yeah, looks like everybody's muted now. Okay. So the bank statement loan is the number one product that we sell. We're doing those up to 90% LTV with as low as a 640 credit score. That was just lowered this last week. So that's some of the improvements that I'm talking about. We'll do loans up to $3 million, minimum loan amount of $150, 12 or 24 months, business or personal. And we'll talk a little bit about that more in a minute. On the bank statement loan, there are seasons of 2 years is the shortest it will go. We have a bank statement elite program. Sometimes the pricing is a little bit better on that. They do require 48 months, but this is just 2 years. Rates are 30-year fixed rate. We have no arms. 2 years self-employment is required when you do a bank statement loan. Borrowers can own as little as 50% of the business. For business bank statements, if they own less than 50, you're going to go to a personal bank statement loan. Purchase and cash out rate term refinance will do all the different transactions. Owner occupied second homes and non-owner occupied. 1099 option is available. This is a great option for your realtors because almost all your realtors are 1099, we can use a 1-year 1099. We'll talk a little bit more about realtors in a minute. 40-year interest only is available, so it's a 10-year fixed rate with interest only, and then it modifies into the 30-year loan. It does recast at that 30-year period or 10-year period for the 30 years. So it is a total of a 40-year loan with 10 years interest on the front end. Most loans qualify with an expense factor of 50%. So that means if your borrower makes $200,000, we're going to be able, and we see that on deposits, then we're going to be able to use $100,000 of that income to be able to qualify with. Now, that is a standard type of a business. If a business is a retail shop of some sort, or wholesale, a manufacturer of some sort, or restaurant, also they include home builders in that as well. They have a higher expense ratio. We're going to use a 70%. But for those companies that maybe your borrower is got their own business and they work out of their house and they have less than 20 employees, we will go down to a 15% expense ratio. So you could use 85% of that qualifying income instead of only 50%. And all that takes is a letter from the CPA or an accountant stating that their expense ratio is at least this much or less. So that's expense ratios. Loan amounts greater than equal to 150 and required to be an additional appraisal, which is paid by the borrower. And we are doing non-permanent resident aliens on this one now, and that came out about a month ago. So that is the bank statement loan. Any questions here? No questions? Gosh, explain the loans then. All right. So again, that's number one. How do you, and I'm going to kind of get into selling today. If you are talking to a realtor, or you have a realtor that you've been after for a long time and you can't get them to come on board, just ask them a question of this. Mr. and Mrs. Realtor, when's the last time you've had a loan turned down because your borrower couldn't qualify with their tax returns? Have you ever had anybody that's turned down because of no qualification on the tax returns? And if they haven't, don't say yes, then they're not doing much business. Then my next question is, what did you do with that borrower? And if they have no solutions for them, say, well, how would you like to be able to qualify those borrowers from here on out using deposits on their bank statement instead of their tax returns? Their eyes will open up. Also, too, on a bank statement loan, what we generally find out, and what we encourage, is if you have a self-employed borrower, get their tax returns, run that the standard way, but send us your deposits on the bank statements, because I bet we will come up with more income than they will with tax returns, which will allow what? Allow them to qualify for buying a larger home, which isn't your realtor going to be happy about that. So those are really two ways I would go to a realtor and say, do you know about this information? And talk to them about those two things. They're great sales points. There's the 1099 income, 660 minimum FICO score. Again, they have to be 1099 with the same employer for the last 2 years. And again, this is a great realtor loan. So if you're talking to realtors, I would certainly bring this up in the conversation. And I'll talk about the realtor presentations later, but we do realtor presentations for you. When we have at least 10 realtors in a room, we generally walk away with at least 1 or 2 loans, and they're generally the realtor's loans that you're getting just because of this option. Here's the Bank Statement Elite program. Again, it's just a little bit better when it comes to pricing. Sometimes you're going to be foreclosures, it's going to be 48 months instead of 24. Our second highest producing loan is the investor cash flow, or the industry calls it the DSCR, debt service coverage ratio loan. If you've done VA loans, you've always been told VA loans, streamline refi is probably the easiest to do. Well, this is the loan that's easier than you have no income and no employment on this loan at all. We're using it, the loan as kind of a quasi commercial loan, and we're using the debt service coverage ratio, which means if your payment on the house is $1,000, then we expect a 1-to-1 ratio to the rent being $1,000. So 1-to-1. Now we will go down to 0.85, which means $850 of rent with a $1,000 payment, which is a negative cash flow. And we also have, at a 70% LTV and 700 credit score, a no DSCR loan. So don't even figure the DSCR at all. And we do get better rates if we go higher than 1.5 up to 1.5. So there are some benefits there to do have a better DSCR. These loans can be closed in the name of the LLC, but that doesn't mean we're doing the loan in the name of the LLC or using LLC credit. We're still using the borrower's individual credit and their individual assets. Now they can use business assets if they own to qualify for the loan, but the loan will be closed in the name of an LLC as long as that LLC is used primarily for real estate investing and there's no more than 2 members of the LLC. Good thing about a DSCR is there are no total number of loans that they can have purchased. This is another loan where I would ask a realtor, do you have anybody you deal with that are investors that have more than 10 loans that can't go Fannie Freddie Union? And the last time I asked that question in a room of 12 to 15 realtors, 3 or 4 raised their hands and did not know that there was an option, and they were going to go call their investors as soon as they got out of that meeting and say, hey, I've got options for you to go buy more property. And so this is a great way to, again, break into that realtor's office and give them something that may not have. Any questions on a DSCR loan?
Tom, I have a question. If I can go back to the bank statement
Yes.
program. I jumped on just a few minutes late, but on this scenario, if you have a client that has NSFs, are those excluded from, does that disqualify the borrower from getting a bank statement loan program?
It doesn't disqualify them, but we will limit the number that they can have. I'm thinking it's 6 within the last 12 months, but I will tell you, I had a customer that was a janitorial service, and we had a lot of NSFs, and at first the loan failed because of NSFs. What I had him do, because what he said was happening is his clients weren't paying him on time. So what he did is he did a spreadsheet, and he showed that every time these clients were late on their pay, that's when his NSFs occurred. And I think there was 15 NSFs within the last 12 months that we got approved as an exception. So again, it comes down to the documentation. The borrower did a really good job of documenting it. So sometimes it takes a little bit more effort, but we can do more than just 6 in the last 12 months.
Okay. And then my other question, which you may have touched on this, is the appraisal process. Is that done through your department, or do we order the appraisal and it can be transferred over, or you utilize it on your end?
Sure. If you guys have got a loan in-house that you were trying to do, and you got to flip it to us, we will do a transfer of an appraisal. That's not a problem. If you know the loan's coming to us up initially, then what we'll do is whenever you go in to request registration and then the disclosures, as soon as the borrower signs the ITP and the LE electronically, you can go back into our system and go into Appraisal Vision and order from 6 or 7 different AMCs. And then that order is handed out to the appraiser. You'll be getting communicated with through the entire basis. And then if you've got a rebuttal that you want to do, then you can do that through the AMC yourself. So it's like you've got contact directly to the AMC, but you're ordering it through our portal. So that answer your
Okay,
question?
thank you.
Yeah.
Yes, sir.
You bet. And sometimes I get on a roll, guys, so feel free to interrupt me. It's not a problem. If you've got some jumbo loans that you're having a difficult time with because maybe they've got a late pay in the last 12 months on a mortgage, they've had some foreclosures or something like that, where most of the best priced jumbo lenders out there just won't do them, we'll take a look at them. So remember us in those occasions as well. Portfolio Select is just a full doc loan, which is down to 640, up to 2.5 million. 1 year seasoning on foreclosure, so 12 months. 2 year seasoning for bankruptcy. Purchase rate and term cash out. That's something too. In Texas, you won't find very many jumbo lenders that are doing cash outs in Texas, especially if they have late pays on their mortgages. And that is something that we have done readily. So be sure to remember us on those cash outs for those jumbo lenders in Texas. The I-10 loan, I would look to us for an I-10 loan, to be honest with you. It requires a driver's license in the state that the subject property is in. So Texas will not issue a driver's license to an I-10 holder. So this person would not qualify in Texas. If you have people outside of Texas where they can get a driver's license, then certainly we can help you with an I-10 loan. Asset qualifier. We're seeing a lot of people have sold their businesses, or a lot of people have retired. They no longer have that flow of income that they had in the past, but they've got a lot of assets. We'll use their assets solely for them to be able to qualify for the loan. So this is a great thing to approach your financial advisors with, because the last thing a financial advisor wants is for somebody to take the $1 million that they've got in holdings with their client, and they take 500,000 of that to go pay cash for a house. So they're motivated to tell them, hey, you need to go call Holston and let him know that you've got a loan that you need an asset qualifier for. That's a real good option for them. The Foreign National Program is really a sub-program of the DSCR loan, or investor cash loan. And I told you a while ago, this is the easiest loan that you'll ever do. Well, actually, this one would be the easiest loan you'll ever do, because it's no income, no employment, and no credit. So if they don't have U.S. credit, it doesn't matter, because we're not going to ask for a credit report. Minimum loan amount $75,000, max is 1.5, and they must have a DSCR ratio of 1 to 1. So that payment must cover the rent must cover the payment. All we need to do is have the money seasoned for 60 days, and 30 of that needs to be in the United States. And we do require 12 months reserves, where on all of our other products, we require 6 months reserves. So a little bit more reserves there. This is a great product if you have people that have their children going to school in the United States and are looking for a house to buy to put their child in while they're going to school. I see that used for that all the time. And then, like I said, we're not doing any agency loans. We kind of did those through COVID, just whenever things were kind of tight. So those are our products. Does anybody have any questions on the products? Some of the things we just rolled out, like I said, are non-permanent resident aliens. We have loans for them. On our investor cash flow, we're accepting gifts now where we didn't used to. We're doing condo hotels as well. Let's see, we do short-term rentals under our DSCR program. So lots of good options have come out in the last 3 or 4 months, and we're happy to see those coming out. So again, this is under the mortgage programs tab. and just go down, select which program you want, or go and actually click into the program from there. From here, let's just take a quick look at let's go back to the main page. From here, these 4 icons are the ones you probably use the most. This is the resources tab. And I won't bore you with this one too much, but you'll notice there's the approved AMCs talking about their inside appraisal vision in our system. So you can choose any one of these and select your appraiser. E-signature instructions. So if you've got a borrower that e-signature, or the documents went out to, they need to sign it, they don't know what's going on. Here's some great support for you there. Loan submission documents, mortgagee clause, other documents, training guides, and you're going to see these throughout the process of a loan being offered up to you. One of the good things that we do is we realize that you doing a loan with us is not going to happen 3 or 4 times a month where you get used to doing our system. Now, we hope it is. Numbers say that you're probably not going to have 3 or 4 of these a month that you're going to do. So we understand we need to hold your hand and really walk you through the process every time like you are a brand new broker with us. So you're going to get these offered to you online whenever you're going into a site. But more so, you're going to get an email from me and from inside staff every time you've reached a milestone as to what the next milestone is and what to do next. So we're going to walk you through the whole process. I'm available on the phone or by Zoom to get online with you to see if you're having a problem. But the videos and the job aids are really easy. The videos are generally 3 minutes or less. So it's not like you're having to watch for 30 minutes on something. They're very simple. And our system that we use is something you're probably going to recognize. So here's all that information. Here's the videos. They're very helpful. How to request a change of circumstance, how to register and request disclosures. So these are really, really useful tools. Okay, so let's get back to the fun stuff now. The non-QM quick quote, if you saw where I clicked on this icon right here. That's where you're going to go for product pricing and eventually submitting a pre-qualification to me to be able to pre-qualify. So let's just do a quick one here. A loan amount, say, of $300,000 and credit score of 740. And by the way, those are about our average scores and loan amounts. Loan to value generally runs about 80 to 75%. Let's do a Texas property. And let's say we're going to do a purchase on a bank statement loan with 12 months bank statements. And it's going to be owner-occupied, U.S. citizen, and it's going to be borrower-paid compensation. Now, you can choose to lender-paid compensation as well, but to make it easy right now, we're just going to choose lender-paid or borrower-paid comp. You'll see the 2 programs come up here. By the way, you can do a 90% on this program, and that one too if you'd like, but we're doing an 80. Right now, both prices are the same. Or approximately, we'll see here in a second. 24 months on the seasoning on a housing event, 48 months. So this is a little bit harder to qualify for. But let's review some rates here. So a par quote is going to be a 7 7/8. So that does not include your compensation. So if you go back and choose a lender paid compensation, that would add in your compensation. And now you're looking at an 8.375 is going to cost $3,000. That's the highest rate we're going to have. So that's with a lender paid compensation of 2%. So you can use this how you would like to use it, whether it be borrower paid or lender paid. Once you do select a rate, you can select that option and you can skip through that 3.4 and you'll get instructions. I'm going to send you instructions on how to do this. This is doing the pre-qualification. So now you're going to come in, you're going to put me as your accounting executive, you're going to put you as your company, all the information. Then you're going to start dragging and dropping your documents for this bank statement loan that we've priced out. Now, the only thing that you may not have at this point in time is the bank statement questionnaire, which you're going to get in my email prior to you doing this. And this bank statement questionnaire is pretty simple. It just helps us understand the ownership of the company, the details. That way I can make a good guesstimate as to what expense ratio we're going to be held at, whether it be the 50% or it's going to be the 70% for a retail distributor of some sort. It's going to tell me what kind of bank statements, number of employees, that's including 1099s. This, when you send it to me as a pre-qualification, it does not have to be signed. Just need accurate information so I can give you an accurate pre-qual. Whenever you submit this loan for underwriting, this will need to be signed by the owner or the CPA of the company. Okay. Right. Close that. Simple as that. Once you get those uploaded, you hit submit, and it comes to me, and I do the pre-qual for you. I'll be in contact with you. At this point in time, if let's say we're short on income, the deposits come back, and we're not quite where we need to be with the income, we'll start talking about what can we get, or what do we need as an expense ratio, and do we think we can get there with a company? And we'll start talking about it. Sometimes there's deposits that are atypical, that, in other words, larger than most of the deposits. We can work with those. If the borrower can support how that was income to them, sometimes we can use those. Sometimes they exclude deposits for other reasons. We would just need to document those, maybe bring those back into the calculation, and that will bring our income up as well. So there's maybe some little bit of work to do afterwards, but generally we'll have a pretty good idea here when we send it out to our bank statement review team as to what the bank statements are going to give us as income. And generally, I don't have to work too hard to get these. It's pretty simple. Okay, so that's the pre-qualification process. Again, that is the non-QM quick quote. And then the next thing, does anybody have any questions about a pre-qual? Everybody good with that? Okay. Pretty simple. And again, the first thing to do is call me with your scenario. Let's talk about it. Let's talk about how to structure it, the best chance of approval. And then we'll get it uploaded for pre-qual. And once I take a look at it, we may need to make some adjustments. If we do, we will. If not, you'll send you out your approval. And the next step would be for you guys to go in and register and lock your loan and request disclosure. And you would do that here through the TPO portal. And again, this may be something that some of you, if you've worked with brokering other loans, this encompasses TPO Connect. So it's very, very standard. And let's just do, and by the way, I didn't choose this name. See if we got that right. Yep. Okay. So once you log into our site, you'll see turn times. Here's 1 business day on setup, 2 to 3 business days on underwriting initial funds, 1 to 2 business days for condition, closing 1 business day, CD issuance. I'm sorry, pre-CD 1 business day, CD issuance at 1. So we're running real quick. It all depends on how many times you have to do this as to how long it takes you to get your underwriting done. Other than that, it's pretty quick. So here, this is where you would go to add a new loan. I'm not going to go into that today. We can certainly help you with that. I think it's probably overload to be able to go through that today. So there's a great video, 3-minute video, tells you how to upload a file for registration and disclosure. So it's very simple. What I do want to show you here is our marketing portal, and some of the things that are available to you. When you get your credentials, you'll be able to log into this portal and come in here and use all these assets that we have. This asset qualifier, you see it has for your social media, has some graphics for you, and whether it's you're going to send it to realtors or borrowers, bank statements as well, bank statement for realtors, cash out refinances, investor cash flow loans, BSCR, and to realtors, buyers, just missed borrowers, foreign nationals, platinum jumbo. Then we wouldn't use that unless you're outside of Texas. Portfolio select, delayed financing. And by the way, I did mention it earlier, but we do allow delayed financing in our programs. So great opportunity there. Interest only, which your investors are really interested in this interest only. So I would certainly want to explain that to them if you have those. So that's all the social media, and you'll notice that none of it has Angel Oak on it at all. This is for you to brand for yourself and use it as you wish. So feel free to do that. The flyers are where you can go into our system and actually put your contact information on our documents. So let's say the bank statement loan here. You'll come in and you'll put your name and your telephone number, email address, any disclosures that you want in here, and it will place it on this flyer. Once you put this information in over here one time, it stays. So next time you come in, you will not have to put this in. You don't have to upload your logo, your photo, or anything like that. It will all be there the next time you do it. So that is really helpful. And we've got a lot of different things here: bank statement, condo hotels, late financing, flyer for CPA. You know, I keep trying to give you guys maybe some marketing tips, but when that realtor is getting that no from their borrower because they can't qualify because their tax returns don't have enough income on them, who is it that did such a great job with their tax returns if they can't qualify? That's the CPA. So that's a great call. Call that CPA that you know. Call CPAs that every time that you have a CPA that's doing anything for your borrowers, and tell them, hey, by the way, what do you do when somebody calls you and says, hey, I can't qualify for my loan? What are we going to do with my taxes so I can qualify? And let them tell you what they do. They increase the tax liabilities because they have to have more income. They wait for 2 years and take less deductions. Again, more tax liability. They have to pay the CPA additional fees for amending their tax returns. None of that's good. So what about an option of doing bank statements for a loan? You don't have to have tax returns at all. The CPA will say, you bet. I've talked to 2 of them that I know myself. And they said, I didn't know that these were even out there. And yes, it was something I would do if I had a borrower that called me or a client that called me and said, my tax returns don't qualify for a home. So CPAs are a great referral source for you. And I personally don't know of any loan officer that's really working that part of the industry. So that would be one of the first places I would go if I were in LO. Here's the Foreign National, something for high net worth individuals. This is going to be the asset qualifier loan again. Interest only flyer, investment property. So you can see there's just lots of flyers here for you for the non-QM programs, and you can use these at any time. These are something you've probably seen before. These are where the hand comes out and draws a cartoon and they're having a sales pitch behind them. These are really professionally done and very useful. So some of them are geared towards borrowers, some are geared towards realtors, but these are really entertaining little, short videos, maybe 2.5 minutes long. And I mentioned earlier about the realtor presentation. And in Texas, if you're in Texas and in the Dallas-Fort Worth area, we will take this realtor presentation and actually do it as a realtor CE class. In fact, I have this class available, and the company that supports us in doing this, they do a credit class. So we can do 2 hours if you'd like. If you want to do a great big gathering of realtors and put on a show for them and give them 2 hours of credit or 1 hour of credit, you can choose 1 or 2. We'll come in and perform these presentations for you. And I won't be saying anything again about Angel Oak, the other company. They will say something about them because they're the ones that are helping people with credit. But it is very informative and I think a very useful marketing tool to offer a free CE. If you don't want to do it as a CE, we still will come out and do these for you. It's the way we've always done them until just about the last 2 months is when we started doing Realtor CE. The short one is the one I would suggest because the long one, sometimes their eyes might glaze over. But the short presentation goes in, and the crux of it is we're going to show them some scenarios and make them think about the loans they've turned away or couldn't get done in the past, and how they can increase their income by becoming non-QM by $54,000 a year just by doing 3 more loans. So this is a really powerful. This is one I said if we have 10 or 12 realtors in the room, we'll generally walk away with 1 or 2 loans, and it's a very, very good presentation. I can come out and do it for you. You can take it and do it on your own. I even have actually a guy I've known in the business for 30 years. He and I kind of did it. He did the basics and I did the color commentating. So it was just a really good presentation. So and he got some business. So that's the marketing material that we have available for you. And I'll be glad to walk anybody through this once you get your credentials. If you want to get this set up or you want to talk to me about the realtor presentation, just please give me a call and I'll be glad to walk through that with you and get you set up. That's it, about it, guys. Again, just remember everything I showed you here, it just starts with a phone call to me with a scenario. Once you get that done, I'm going to be sending you emails. My inside staff is going to be sending you emails to walk you through the process. It's not hard. We've been doing this for 10 years, and we've made it as easy as possible, and it keeps getting easier. So don't be afraid of a non-QM loan. We'll help you all the way through the process. So I look forward to doing some business with you. Unless somebody has some questions of me, I'm done done with my talking at this point in time.
I'll jump in real fast. LOs, just FYI, I'll send out an email in regards to the lender comp that we chose. I'm going to go back and check all our documentation that we submitted. So I'll send that out in an email to you guys.
Holston, are we live now?
You guys have to get, Mandy wanted to wait till after this presentation. So as soon as this is over, I'm going to send in credentials for everybody. And so you guys will start seeing credentials come through. And then, yeah, we're live basically after that. I'm going to double check with Mandy to make sure there's nothing else she wants to cover before, but you should be seeing something from me shortly.
Okay.
Also, too, remember what I said first of the presentation. Doing a pre-qualification doesn't require any credentials. So if you want to get a loan started, you don't have to wait on credentials to do that. And once your credentials comes through, then we can get started with the actual upload of a file to underwriting. But right now, if anybody had a loan, we can get started on it today. If Holston says you're good to go.
Yep.
Tom, do you mind if I call you after our meeting? Just have a few scenarios I'd like to run past you rather than holding up everybody else.
You bet. You bet. Do you have my phone?
I do.
Okay. Yeah, just give me a buzz.
Okay.
Awesome. Well, either I put everybody to sleep or I answered everybody's questions with my presentation. So hopefully it was the latter instead of the first. But we're looking really forward to getting you guys up and running and working with you guys and closing some more loans. I think if none of you have participated in our monthly presentations that we do for LOs, they're deep dives into bank statement, deep dives into DSCR, just missed Fannie Freddie information, how to get non-QM borrowers. We have all those that are done. And we generally have about 150 to 200 people on these calls nationally they happen 3 times a month generally. I just want to kind of give you this number to let you know what the market looks like for you in non-QM. When we do these, we poll everybody on the call. How long has it been since you've done or closed a non-QM loan? And the average is about 20% have not closed one in the last 12 months. So only 20% of the loan officers out there are actively doing non-QM loans. And if you haven't done one in 12 months, the guidelines have changed so much that you don't know how to do them anymore. And that's just not with us, that's with the industry. So 80% of the loan officers out there don't know how to do a non-QM loan. And when I do my realtor presentations, I ask them, like I told you earlier, how many of you had a non-QM loan close one of your deals in the last 12 months? And hardly anybody. I think I had 4 people raise their hands out of 35 or 40 people. So that goes to show you that there's a large market out there for non-QM and people are not familiar with these. That's the reason why these conversations with the realtors, I think, are so important. You got to ask them the question, have you had somebody turned in? Does your investor own more than 10 units? Do you need solutions for those? And if they do, then you can start talking about non-QM loans and how you have the ability to do those for them. It may be uncomfortable right at first, but the more you learn, the better you'll get. But it is a market that is not being is just not being aggressively gone after. So I think that it's there for the taking if you choose to take on the non-QM programs. I think there's a great market out there for it. Any other questions?
I think we're good, Tom. Thank you so much. I appreciate it.
Oh, I really appreciate you guys' time, and just give me a call, and I'm ready to help you guys close some loans.
Okay, sounds good. Thank you.
Thank you. Take care.
All right, bye-bye.